Hi everybody, Thomas at Rebel Income here. With Christmas soon upon us, it's a good opportunity to turn the Rebel Income analysis lens on one of the leading candy makers in the United States, the Hershey Company. This is a company with a lot of fundamental strength and a stock that's down about 33% from the all-time high it reached in May of this year. Does that make it a good bargain, or is it going to leave a sour taste in your mouth? Let's find out. Hershey Company is a stock that peaked in May of this year at a high at around $285 per share. From that point, it's been following a very clear downward trend. We can see it manifested by the 20-day moving average, which bottomed in early November and began to flatten out, but in the last few days has started to trail back down again, with the stock currently below that 20-day moving average and sitting at around $185 per share. The 200-day moving average is also clearly trailing down. Now, under normal circumstances, this could start to look like a good bullish level 2 setup, but we would need to see a couple of different things happening first. For one thing, the 20-day moving average would need to start to flatten out, as I already mentioned. We would want to see some bullish momentum coming from our daily candlesticks in the form of something like a bullish hammer, a pattern kind of like this, which we've talked about in previous videos. When we see those kinds of patterns, those are high probability indications that the stock is building bullish momentum. Buyers are starting to come back into the stock, and that should be able to give the stock a little bit of a lift for the time being. Right now, we don't see those happening. That means that there's not a really good technical setup right now. It doesn't mean, however, that the stock couldn't offer a useful value right now. If the fundamentals are solid and the overall value proposition looks attractive, this may still be worth considering as a long-term investing opportunity. So let's dive into the fundamentals and let's take a look. The Hershey's Company's free cash flow was about $1.6 billion over the last 12 months. That is a little bit of a decline over the past 4 quarters from $1.8 billion, as well as over the last 3 quarters when it was almost $1.9 billion. It's also just a little bit lower over the quarter prior from $1.65 billion. Seeing decreasing cash flow is generally a warning flag and something to be concerned about if all of the other fundamental metrics that we're going to be taking a look at are also showing similar signs of trouble. Cash and liquidity, as reflected by available cash on the balance sheet, is slightly higher in the last quarter as well as in the last year. All the same at about $471 million. That's a little bit minimal, especially when you consider it against long-term debt at about $4 billion. Long-term debt has also been rising over the past year from about $3.3 billion, and that is also a little bit of a warning sign, especially in the face of limited overall liquidity from cash and other available assets. Overall operating margins show pretty healthy profitability as measured by net income versus revenues. We can see that in the last 12 months, that number was 17.1% and was exactly the same thing over the last quarter. That implies that operating margins are very healthy. They've been very stable over the last 12 months. That's also a little bit of a counter to the other warning sign indications that I mentioned from free cash flow and overall limited liquidity. Hershey is also a company that pays a healthy dividend at about $4.77 per share. At the stock's current price, a little bit below $185. That represents a conservative dividend payout yield of 2.58%. The really interesting thing and possibly tempting aspect of Hershey is the fact that it offers a value proposition that demonstrates about 48% upside from its current price. We've got a fair value target at around $274 per share. Now, if you're going to be thinking about taking advantage of that opportunity, the next step in the process should be to analyze the stock on the basis of overall risk to reward right now, based on things like support and resistance pivots. The stock is approaching its 52-week low right now, which I'm going to put at about $184 per share, just a little bit below the stock's current price. Immediate resistance for the stock is just a little bit above that point at the most recent pivot high at about $191 per share. Now that's interesting because it implies that with the stock at about $184.50, there's about $6.50 of upside if the stock were to bounce off of support and rally back up towards resistance. And that might be tempting for a lot of technical traders. However, the question right now is whether or not it offers a reasonable amount of reward, that $6.50, compared to how much potential downside. With the stock near its 52-week low, the easiest way to project next support if the stock breaks down below $184 is to use the current distance between support and resistance levels. That means we've got $6.50 of upside compared to about $7 of downside. It's not even quite 1-to-1. We certainly want to see a minimum of at least 2-to-1 if we're going to be thinking about any kind of a short-term trade in the stock. If I'm thinking about this from a valuation standpoint, this also implies that my reward to risk ratios are a little bit skewed right now. Despite some fundamental strengths and an interesting and even tempting value proposition with a useful dividend, that means that for me right now, I'm going to go ahead and call Hershey a sour suckers bet. Probably one to stay away from for the time being. Hope this is useful, everybody. If you like my content, please go ahead and subscribe to my videos by clicking on the link shown right here. You can also learn more about the Rebel Income System by checking out this video. If you'd like to subscribe to my trading alerts and reports, you can check out my Patreon page. That link is listed in the description area for this video. Thanks again. I'm Thomas at Rebel Income. Talk to you again soon.